Let's put the spotlight on the primary market then, because the IPO market is seen to be taking a backseat, of course, because for 2024, we have seen so many numbers of these issues coming in. And as per Goldman Sachs, India was the second largest market in terms of the new IPOs. But start of 2025, when the market sentiment did take a backseat and did take a hit, the IPO market news flow was also seen to be fading away. But where is the sentiment in the IPO market headed, and what's not boding well? Let's deep dive into that, and let's go for the discussion with Mr. Pranav Haldea, who is the MD of Prime Database Group, as well as Mohit Gulati, who is the CIO and Managing Partner at ITI Growth Opportunities Fund, is joining us on the show right now. A very good morning, gentlemen, and thank you so much for your time. First up, Mohit, help us with your take on the outlook for 2025, because of late, the deals news flow and the IPO news flow is seen to be taking a backseat. What's not boding well for the IPO market right now? Give us some of the concern and the pain points right there.
Actually, first up, good morning. I think, if I have to sort of summarize the crazy bull run that we've had over the last 2 odd years, right? If you look at the IPO listing market, valuations had gone completely through the roof. There was a lot of corporate greed that was seen, promoters taking money back home. We are in a phase of consolidation. We are in a phase of cool off. I think there are about 35 issues which have got approval on the DRHP, and which are waiting on the sidelines, waiting for the markets to just sort of turn a little positive on sentiment. So I think, the outlook, we will still, I think, raise anywhere between 20 to 23 billion for this year. Using the IPO market, there is enough supply of paper. The valuations will correct. I think people's expectations that they will be able to sell stock at the highest possible price, leaving nothing on the table, that will change. That has to change. And the markets have, in a way, made every promoter go back to the drawing board and realize that, that greed of trying to sell at the top may not really work out for you. You have to keep something on the paper, something on the table. And that is really where the outlook is, that you will continue to see robust growth in the IPO market, but for quality paper, which is leaving something on the table.
Interesting. Pranav, hi, morning. After a total of 93 IPOs that came about in 2024, out of which 46 of them are already trading sub the issue price. Given the market correction and this froth which eased off, do you sense that maybe for some time to come the IPO pipeline may have dried up?
Well, good morning and thanks for having me. Firstly, if we look at the historical data, it shows us that the primary market always follows the secondary market. There have been several instances of this, whether in 2007, 8, or 2011 or 2013. And what you've seen over the last 6 months in the secondary market is essentially now reflecting in the primary market as well. You raised the point about a lot of IPOs from last year now trading below the issue price. In my view, it is unfair to expect IPOs to continue to give positive returns until perpetuity. We somehow have this expectation from IPOs that not only should they give a huge boosting pop, but continue to be in the positive whenever we do the analysis, 3 months, 6 months, 1 year, 2 years down the line. When the entire broader market is falling, how can we expect the IPO stocks to continue to trade positive? In my view, an IPO company becomes like any other listed company on the day it gets listed. And after that, its price moves up and down on the basis of the company's performance, the sector performance, how the broader market is doing, the financials, etc., etc. So, we should not really get into this debate about a lot of these IPO companies now trading below the issue price. Even as far as the valuation is concerned, I think my other panelist was mentioning that valuations were very expensive. We have to, keep in mind that no one is forcing any investor to buy an IPO. In my view, if an IPO is even subscribed a single time, it shows that there was enough demand for that IPO at that particular price. And as we all know, valuation is not really a science, it's an art. The entire secondary market exists because there are buyers and sellers who have different perceptions of price. So, I think even last year, what you saw in terms of a huge release of IPOs, there was a lot of supply, but there was a lot of demand as well, for good quality people at attractive valuations. you had participation from domestic institutional investors, you had participation from foreign investors who were at the same time drawing from the secondary market. And of course, you had a lot of participation from, individual investors. In fact, just to close my point, we did an analysis recently and we found that IPOs which got listed in 2019, 2020, 2021, on an average, have delivered 30 to 40% return till date. So this kind of puts the argument to bed, which is that, IPOs are expensively priced, and after the listing, they all go below issue price and, give negative returns to investors.
Yeah, absolutely. I was not debating that point at all, Pranav. I mean, it was just an anecdote that most of them are trading sub the issue price, as is the rest of the market as well. So no denying that. But my point is, given the correction that's played out both in the primary and the secondary markets, would IPO pipeline get pushed back now?
Well, absolutely. You've already seen this in March. You've not had any issue hitting the market. And I think till the time, yesterday, of course, you saw, huge upswing in the secondary market. But I think till the time the broader sentiment doesn't improve, you will not see, too many issues hitting the market. We have to remember that, for companies, an IPO is a once in a lifetime event. And, for them, they would like to launch their IPO when, everything is near perfect or perfect. And in bearish times, that's why you don't see too many issues hitting the market.
Well, certainly not too many issues and no news flow on that front. But Mohit, what we have seen is definitely some of these private equity players do look out for an exit via the listing route. And help us with your take on what's been happening on the private equity side. Is there even a bigger sentimental hit with respect to the valuations and concerns over there?
No, I think, funnily, I'm going to sort of invert Pranav's entire argument, right? The primary markets have actually been in a structural bear cycle ever since 2022. And anyone who doesn't see it or doesn't call it out right is clearly joking themselves. This time, it's been different, right? So primary has been actually being the lead indicator and secondary is followed versus the other way around. There is, it's been utter carnage, honestly, because what has happened is it's a perfect storm. Liquidity is dried out. So you're some of the largest, biggest funds in India. Global funds who were investing in India, the likes of the Tigers and the Sequoias, and Sequoias of course broken, and the likes of Tigers and say SoftBank, they've just completely stopped doing new checks. The last 18 months, their deal activity has been almost next to zero. Everyone's only been in sell mode. Some of these global funds probably haven't reached end of fund life, but a lot of Indian funds, the larger ones, have been struggling at end of fund life. DPI has now become the sacrosanct thing, which is essentially distributed capital that has to go back. It's been tough, and I think we are reaching a stage where people are saying, we need to get out of stocks, or we need to just find a way out. Which is why you're seeing a lot of deal activity happening on the pre-IPO side, where there's a little bit of offloading of equity happening from the private equity side also, just to discover value, because maybe in the private market, I valued a company at say, $3 billion. But in the public market, because of like-to-like comparable stocks, maybe 3 billion is not the net worth and should be probably 2 billion or maybe 1.5. Case in point, Ather, right? I think when Ather gets listed, there'll be a direct neck-to-neck comparison with Ola Electric. They won't be able to command the valuation premium that they did in the primary market. So I think there's a lot of correction that's happening. There's a lot of dump that is happening because of pressure around exit, because of pressure around fund of end life. The foreign institutions have just been selling across all paper in the last one and a half years. You talk about Oyo, you talk about Shiprocket, you talk about, I can give you a list of like 50 names where it's only been sell from their perspective in the pre-IPO side. So that's my limited take. Happy to hear your thoughts.
Well, certainly you did counter that point, Mohit. We take note of that. But yes, of course, we have seen a big rise in the tech startup related IPOs back in 2024 from the likes of Swiggy. Ola is the one you touched upon. But given the correction in the valuation, do you believe that now maybe some of these tech companies will take a bit of a backseat to come out with the IPOs? And along with that, Mohit, help us with your thought that which theme can actually rule the IPO market from here on? Any particular theme that is standing out for you?
No, I think multiple themes. Like I think PhonePe will find a great listing. This is India's largest UPI platform. 50 plus market share leader. So you will see some great businesses coming out, and I think everyone's sort of huddled and realized that um, a pump and dump is not going to work, right? So you need corporate governance. You need to. I think more importantly, founders have realized that communication with the market, right? Whether it was Vijay Shekhar Sharma, whether it was Bhavesh, everyone realized that communication with the market, but communication with the market participants is a very important reason for you and your stock to find flavor. If you continue to remain brash, if you continue to be reckless around how you're communicating to the market, markets are just not in the mood to give you second chances. They will punish you, and your stocks are going to fall 50-70% when there are enough and more names out there. So I think you're going to see a very smart breed of entrepreneurs who are going to list themselves, taking an amalgamation of all the learnings of all the mistakes done by some of the larger players today. Case in point, Swiggy, Zomato, everybody, right? The good and the bad, all of them have to be taken together. You take a download of all the learnings and essentially go out for that listing, keeping something on the table, betting on the fact that the future is what this business is doing. I mean, look at a company like say Zetwork or Infra Market, right? These are great future-ready businesses. So I think valuations will, market will try and find great valuations for these businesses. So there is a lot of themes that are emerging out, particularly in the fintech space. People who've been able to regulate themselves right, not try and do things which are overly over the top, going against the regulator. So across all categories, and of course, the buzzword AI is going to be here to stay. Unfortunately, India didn't do its own DeepSeek. Had we done a DeepSeek, trust me, that would have been the biggest blockbuster IPO we could have ever seen. But let's see where things go. I think a lot of innovation is happening, and a lot of correction will happen in just the go-to-market strategy for all the IPO participants now.
Aren't we all waiting for something like that, a deep sea kind of IPO here in India? But great to have you both, Mohit as well as Pranav, on the show and get in your perspective.
Thank you. Thank you.
If you like this video, then like, share and subscribe to ET Now.